Hey guys, today we're going to be talking about US Antimony Corporation, ticker UAMY, and if I would buy, hold, or sell and stick to the end to see a DCF. So the company basically refines antimony. Basically, they're the only smelter in the United States working with antimony, and they convert concentrate into the critical metal that powers our defense, energy, and technology supply chains in the United States. So where it stands now is that China runs the rare earth market. As you can see from the graphic here, they have their hand in every single metal, with China supplying 70% of the world with their antimony. What's also interesting in the next column, you can see the demand for antimony is expected to increase substantially from 2025 to 2039, with no other metal being nearly as in much demand. So look, nations aren't going to be competing for cheap labor and manufacturing hubs. They're going to be competing for resource sovereignty. The next global order isn't going to be shaped by, who builds the best battery, but by who owns the metals that makes that possible. Everyone's going to be asking themselves the same question. Can we build our infrastructure, our defense systems, and technology without relying on rivals for raw inputs? And you can already see this coming to light. The shift is already visible. You can tell from the article written right here. I mean, the United States, EU, Japan, and India, governments are worried about what's going to happen with their allocation to rare earth metals. Governments are already under their way rewriting industrial policy around minerals such as antimony, gallium, tungsten, and other rare earths. And all materials historically have been refined in either China or Russia. In April, Beijing introduced licensing rules on 7 rare earth elements and permanent magnets. Last week, it expanded those restrictions to include 5 more elements. These new rules require export license even when trace amounts of Chinese origin rare earths are involved, creating so much friction in the global supply chain. Trump's already all on it, you know? Here's the tweet he posted on Truth Social, X, both. China's moved to tighten export controls on several key rare earth elements and magnet technologies, and I can't see the future, but with what's going on recently, I bet you Trump's eyeing up UAMY right now and saying we need a stake. Well, why UAMY? Of all the companies that process and refine, why UAMY specifically, and why specifically antimony? Let me get into that. If Beijing continues restricting these exports of the critical materials, it increases the strategic importance of, securing a domestic supply. UAMY is one of the very few North American sources of this mineral and holds Department of Defense approval to supply the antimony for munitions and other defense applications. So, just some quick points. They already have an existing U.S. refining infrastructure and production history. They have no dependence on foreign processing or offtake. They're recognized in the U.S. by the Geological Survey's critical minerals list. They have very low debt. They're established regulatory compliance, and they have real operations. This isn't in the future. This is right now, real today. When global conditions eventually push the governments and defense contractors to start sourcing domestically, UAME doesn't have to build up from scratch. They're already producing. And the government's already taken steps. Right here is the title for an article. US Antimony Corp wins a $245 million Pentagon contract to build up that stockpile of antimony. In the last 45 days, the company's raised almost $70 million. So clearly, they are planning for something, whether it be expansion or whether it be acquisition. Antimony is a critical ingredient and raw input to everything used with artificial intelligence, semiconductors. It even has, niche use cases like flame retardant roofing for data centers. But looking at this article here, the US uses about 50 million pounds of antimony a year, and they're busy stockpiling as much as they can at the moment. And now my favorite part, the DCF. We heard the story, it's great. What do the numbers tell? And for this, I wanted to take a step further because I really wanted to try to figure out. I think there's a big opportunity here. So I didn't want to just go by analyst consensus, but I wanted to try to theoretically back into where I think, with the current climate, where things could head in terms of top line revenue. So just stick with me for a second. I think you'll learn something here. It's pretty cool. So basically, when we're starting out, what are we doing at the end of the day? We're refining antimony, right? So first, I want to try to figure out how much money what's the tangible addressable market and what's their penetration? How much of the actual market can we get? Then in addition to that, their profitability. For profitability, I'll defer to guidance from management and analyst estimates of about the 10-11% range. But for now, let's just start with revenue. So starting down with revenue, the U.S. demand, as we saw in the article on the last slide, for antimony in pounds is about 50 million. If you do some industry research, I mean, if you saw from the one slide the insane growth rate over the next 14 years, I think we could just be more modest and just think about it from terms of the U.S. and everything else will be an add-on. Let's just focus on our country because that's where USAMY's biggest purchasers are going to be the United States government. So if the U.S. consumes about 50 million, and we assume about a 7 or 8% growth rate, someone could check me on that. 54 divided by 50 minus one will get you the growth rate. Um, and we're growing at about 8% a year here till the terminal period. I'm just assuming they'll need a growing it at 4%. You can look up terminal period and DCFs, understand that this isn't the time or place. But now that we have how many pounds of antimony the U.S. is going to use, and predicting conservatively, I might add, that they only will need an 8% increase, now we have one of the three factors down. So next we're going to go into penetration. The US, the whole reason we're in this situation is because of global supply chain issues. So I highly doubt they're going to give 100% allocation. It just doesn't even sound smart to give 100% allocation USAME, right? They're going to diversify, somewhere. But I think it's safe to assume, and I think it'll be more aggressive in the beginning years because there aren't other companies with such established operations as UAMY, but I think their penetration could be more towards like 70, 80% in the first 2 years. But let's just make it simple and call it 50% penetration here. So, 50 million pounds is what the US needs. We'll call it, they'll be asking UAMY for 25, half. So, going all the way across is half. And I think that's a fair assumption. So then what's the price per pound of refined antimony? The price per pound of refined antimony is about 27 to $28 right now. That price is going to absolutely soar. I mean, one, we're in the beginning of this AI ramp up phase with data center, semiconductors, robotics, going into space, everything. Okay. But then two, we're getting squeezed. I mean, simple supply and demand. Demand is through the roof, and supply is going to be all the way down. I mean, China is going to be cutting us off. We're not going to have it. So, what happens when demand's high and supply is low? Econ 101, stuff starts getting expensive. And I'm being conservative here. I mean, there are reports that could get up to $100 a pound. You can Google this. I'm just going to stay conservative and increase a couple dollars every year to I think about 40 in the terminal when we get the operation sound out. We don't have these supply constraints. I don't think 40 is unreasonable. I think it's conservative and it could go up way higher, but you have to remember, right? Quantity times price equals revenue. So this quantity amount could be so much higher. The price can be a lot higher too. So I feel like these are conservative estimates right now, which, and this is all in millions here in the DCF part after the revenue, is they'll get 700 million in revenue, and eventually they'll build up to about 2.1 billion in revenue. And this isn't accounting for other countries. This is just the US. I'd assume other countries that are in NATO aren't going to be asking China for these rare earth metals. They're going to probably come to us once we have it sorted out, or maybe they'll do their own thing too. Who knows? So basically, now we have the free cash flow margin. They were negative here in 25. They're projected to break even in 26. And, I think 10, 11% margin for a refinery isn't outlandish. It's average. And going through it with a 10% discount rate, the present value of these free cash flows is 2 billion, 2.1 billion. They have 7 million in cash and a billion in debt, a beautiful balance sheet, which gives us a total enterprise value of 2.2 billion. There's 128 million shares. That gives me a target share price of about $17 and it's trading at 12. It's a nice 40% margin of safety with some conservative measurements on the annual increase in how much antimony the U.S. is going to need, and on the price of antimony. I mean, we're going to get squeezed here on the supply. Demand's through the roof. I bet you these numbers are going to be higher, which would all make the valuation more and this value and the margin of safety even more. So that's all I had. Hopefully, you got something out of this. Learning how to project revenue more from a bottom up perspective than just growing it at a certain rate. For me, I'm a buyer. I've bought in 2 days ago. I love the stock. Hope you learned something. Take care, guys.